for another interesting topic after tea, where I think there was maximum queries. So now you have got the horse's mouth, you will get the answers from the horse's mouth. Well, friends, Natwar Thakrar will be dealing in the topic of investment in India of movable properties and outside India by residents. As far as Natubhai is concerned, we normally call him Natubhai, a very dear friend of mine and Chambers. He was the past chairman of the International Taxation Committee of Chamber of Tax Consultant. His areas of specializations are FEMA and international taxation. He regularly contributes for FEMA updates in the Chamber's Journal, a monthly journal of the Chamber of Tax Consultant. He has co-authored following publications like International Taxation, a compendium, FEMA and non-resident taxation published by Malad Chamber of Tax Consultant, referencer on FEMA by the Institute of Chartered Accountant, and remittance under section 195 practical aspects published by the Chamber. He regularly gives lecture on international taxation, transfer pricing, FEMA. So I think we have got a very lucid personality. With these few words, I will request Parimal Parikh to hand him over a token as a mark of our token and love and affection. Natwar.
Sri Parimal Bhai, Rajesh, Varsa, Yatin Bhai and friends. At the outset, I am extremely thankful to the Chamber for giving this excellent opportunity to brush up. I would say that this subject, FEMA is such a subject that it keeps on, like those of you who are dealing in service tax, they know that we keep on getting regular circulars. In the same way in FEMA also, it's a process of regular updating. And only yesterday we have received updated FDI guidelines. So I would admit that as far as if there are any major changes in real estate policy, then whatever I speak today would be subject to the FDI guidelines, which have been released yesterday. But I have cursorily glanced through, and I have not been able to notice any major changes in the real estate policy. So with these friends, we go to the subject proper. The subject given to me is investment in real estate in India as well as outside India, and it includes not only the kind of investments that you are making for your own stay, house, say you are buying house in India or house abroad, but this would also include some investment for strategic or business purposes. So it is a case of FDI in real estate in India, and when you are undertaking some construction development projects abroad, then I will just pass through those subjects. I am aware that there is a detailed session dealing with FDI in all various sectors, but I will only touch upon FDI in real estate. So what we are going to understand is what is the regulatory framework that governs investment in this real estate in India and abroad. What is the meaning of NRI and PIO? Because this is one area we need to clearly understand, because the meaning of NRI will vary for different notifications depending on the meaning of PIO. So if there is one notification, there is a liberal interpretation of PIO. There is another notification, especially real estate, you will see that there is a restricted meaning given to PIO. Then when we talk about FDI, we also talk about investment in branch of a foreign company, and there are issues relating to the transfer of real estates. Then investment abroad in real estate by individuals and companies, FDI in real estates, and investment abroad by individual persons. And if there are any questions left at the end, then I would be happy to deal with those questions. So as far as regulatory framework is concerned, it is the FEMA Act, and especially section 3 is the governing section which empowers Reserve Bank of India to formulate regulations. And as far as acquisition of immobile property is concerned, it is section 6(3)(I), which empowers Reserve Bank of India to form regulations. And in exercise of those powers, Reserve Bank of India has issued notification number 21 for purchase by NRIs and PIOs in India, except for a lease not exceeding 5 years. So lease is understood to be a current account transaction. So when a property is taken on lease, no approvals are required. If it is for a genuine bona fide business purposes, then lease which is not exceeding a period of 5 years, RBI approvals are not required. It is a kind of a current account transaction. But any lease exceeding a period of 5 years would be treated as an investment in immobile property. Then there are press notes and FDI policies. So those of you are keeping track of this FDI, earlier you may be aware that this DIPP used to issue press notes every year, various press notes, and it was very difficult for people to keep a track. So it has now become, since past 2 years, Government of India has been issuing consolidated FDI policy. Earlier when they started, they were issuing every 6 months that policy. But since last year, they was decided that since there are not many changes in the policy, they keep on issuing every year. It is in the month of April that normally they issue this consolidated FDI policy, and it is issued by a circular. So yesterday only they've issued, it is 17th April, which you can download from DIPP website. And that talks about the entire FDI gamut in India. So, and in exercise of the powers which are delegated to Reserve Bank and in line with the industrial policy or the FDI policy, Reserve Bank issues notifications. So the governing notification as far as this inbound investments are concerned is notification number 20. That is a transfer and issue of issue by persons residents outside India. So those non-residents who are investing, they would be governed by this notification. And as I've said, we will be only dealing with real estate FDI in India. As far as immobile property outside India is concerned, it is section 63H, which is empowering Reserve Bank to regulate these kind of transactions. And in exercise of that powers, again, Reserve Bank has issued notification number 7 for investment in real estate outside India. And there is a notification number 120, which talks about all full-fledged outbound investments. But what we'll be talking is only investment in the real estate projects outside India. Another aspect, I think by this time you must have understood that the thrust under FEMA is not on the citizenship, except we'll see that 8 neighboring countries where there are certain restrictions carved out for certain strategic regions. Otherwise, the thrust in FEMA is on residential status. So the person concerned would have to obtain the approvals and fulfill the requirements, if any, prescribed by the other authorities, such as the state governments concerned. The owners to prove his residential status is on the individual as per the extent FEMA provisions if required. So normally there is a lot of confusion in the mind of the people that if somebody comes and stays in India for a period exceeding 182 days, he becomes resident of India. But as we go along, we'll see that even to become a resident of India is not that easy. So there are a lot of people who are planning their residential status. So one has to be very much careful that it is not only the stay, but it is also the intention that is also counted under FEMA. And therefore this FEMA says that the onus is on the person concerned. If there are allegations that that person is not the real resident of India, then he will have to actually prove, coupled with his intentions and at times even with his conduct. So conduct would be important. As we see in Income Tax Act and other acts, it is the letter which is important, when letter of law. The FEMA is a kind of a act where apart from the letter is loosely worded. Those of you who are reading FEMA, you will see that it is very loosely worded. But and sometimes there could be two interpretations, and we have seen when we advise something, there is always other person who gives a different kind of advice under the FEMA. And the reason being is that both of them may be right, but Reserve Bank will take a final view based on the actual affairs, the conduct that has happened, and therefore that law being an economic law cannot be interpreted in the manner we are interpreting the tax laws. So that aspect also has to be kept in mind. There are general restrictions, as we have seen, on citizens of 8 countries, that is Pakistan, Bangladesh, Sri Lanka, Afghanistan, China, Iran, Nepal and Bhutan. These are all neighboring countries, and government doesn't want that they can freely encroach, because it would be very easy for them to encroach and acquire properties in the nearby states. And we are facing the problem If you go to say Assam or Arunachal Pradesh, we are facing the problem, and therefore there are restrictions. And Reserve Bank, when these kind of violations are noticed, Reserve Bank is little harsh also in dealing with these kinds of persons. And there are general restrictions on buying agriculture, land, plantation property, and farmers. So these NRIs and PIOs are not allowed to buy these kind of properties because it could fuel speculation in the real estate sector, and therefore these are the restrictions under the law. Pardon me? No, these are only the 8 countries which they have stipulated specifically. So as far as real estate is concerned, they will look at only at these 8 countries, because there is otherwise general permission available, no approvals are required. So Hong Kong is not one of the countries, even China is not the countries. So if there is a Indian citizen who is staying in China and he is a non-resident, or even if he has taken Chinese nationality, there are no restrictions applicable to this kind of persons for acquisition of property in India. Now, as I've said, it is very important to understand NRI and PIO, because we cannot blindly advise any person who is NRI or PIO to say that you are freely entitled to buy a property in India, and that we'll try to understand. The term NRI has not been defined under FEMA, so this is looks very ridiculous that the law which actually governs foreign exchange regulations, it has not defined the term very clearly. However, section 2W defines a person resident outside India to mean a person who is not resident in India. So any person who is not resident in India, so we'll have to then understand from the meaning of a person resident in India. And another thing that we have to keep in mind is that NRI has a different meanings under different notifications. I have not dealt with all the notifications, but just for example, I have given a definition under notification number 13, which is dealing with the remittance of assets, which says an NRI is defined to mean a person residing outside India who is a citizen of India. So what it says that NRI should be also holding the Indian passport. Under notification number 5, deposits, is an NRI is defined as a person resident outside India who is citizen of India or is a person of Indian origin. So the definition has been widened, and it will also include PIO. Now PIO also has not been defined in a uniform manner, that also we'll see. And therefore meaning of NRI could change due to the different PIO definitions under various notifications issued by the Reserve Bank of India. Yeah. Okay. No, foreign company cannot buy a property in India except for the purpose of business. That will come as we go along. Will come that they can buy only for the purpose of their business, including the if they require for stay of their officials, they can buy the property. But that we'll see. That will come to that. Now, as we understood, the meaning will keep on changing. And for the purpose of immobile property, meaning given under notification number 30 shall be relevant, as NRI does not include PIO. So when we go for immobile property, you have to understood that when NRI means it does not include PIO. However, don't confuse again yourself, because there are various activities even PIO can do. Only we are trying to just understand that NRI will not include PIO unless the regulation specifically permits PIO also to invest in the property. Is that clear? Right? So why we see the differences? If you look at notification number 5, deposits, I think you dealt with in the earlier session. There was a time when India was in a very badly in need of foreign exchange. So they virtually included whoever had a loose connection with India also to invest in India. And that's why you see a very liberal definition as far as deposits are concerned. But if you look at remittance outside India of assets or for investment in immobile properties, then we follow a restricted meaning for NRI or PIO. Also, we have to understand that a person may be resident NRI under FEMA, but he may be yet be resident under the Income Tax Act. So if we know, all of us know, that if a person is staying beyond 182 days in India, he'll become a resident under the domestic tax laws of India, subject to the treaty benefits. Under FEMA, it is not a case. Even if he has stayed India throughout the year, he can still be a non-resident. So that aspect also you will have to understand, and that we'll see with the help of an example also. Now, person of Indian origin, the term PIO is also not defined under the Act itself, though it has been defined differently under various notifications issued by the Reserve Bank. Now, again, we are having a look at notification number 5, which says PIO means a citizen of any country other than Bangladesh or Pakistan. So here we have not excluded all 8 neighboring countries. We have excluded only Bangladesh and Pakistan. If he at any time held Indian passport, or he or either of his parents or any of his grandparents was a citizen of India by virtue of the Constitution of India or the Citizenship Act of 1955, or the person is a spouse of an Indian citizen, or a person referred to in subclause A or B. So as we discussed, that it is a case of a person investing into banks deposits in India, and therefore we carved out a very liberal meaning. So if somebody marries a totally a foreigner, and that person happens to be a spouse, she will be considered to be a PIO, and she will be entitled to open an account with a bank in India, keep money in FCNR or NRE accounts also, and that is with a view to a altogether different purposes. Now, for PIO under the immovable property, it is the meaning given under notification number 21, which is the notification which deals with investment in immovable property, which means that individual not being a citizen of Pakistan or Bangladesh. Now we are talking about those 8 neighboring countries, who at any time held an Indian passport, or he or either of his parents or grandparents was a citizen of India by virtue of Constitution of India or Citizenship Act of 1955. So here we are seeing that there are 2, and if we go to next chart, we'll see that person who held Indian passport at any time is the person who is PIO, or whose father, grandfather, mother or grandmother was a citizen of India. These are only 2 categories who are permitted to invest in immovable property. Other 2 kind of persons, though they are PIOs for a different notification, they will not be considered as PIO for investment in immovable properties. So NRIs and PIO who is as defined under notification number 21 only is entitled to invest in immovable properties in India. So is that clear so far? Right? Now let us understand the meaning of a person resident in India, who is defined under section 2V of FEMA, which says a person being an individual residing in India for a period of more than 182 days during the course of the preceding financial year. So when you are checking about the residential status of say 14-15, what you will have to see is stay in the preceding financial year. So if he has not stayed in India for a period exceeding 182 days in last year, 13-14, even if he has stayed throughout the year during the current year, he will not become a person resident in India. So that aspect one has to keep in mind. And still, even if he has stayed for 182 days in the preceding year, it still does not include 2 categories of persons. So that also we have to understand. And first we are checking about a person who has moved out of India. So there are people who are going outside India for taking employment, or they are migrating. So what FEMA says, that if a person has gone out of India or who stays outside India in either case, for or on taking up an employment outside India, or for carrying on outside India a business or vocation outside India, or for any other purpose in such circumstances as would indicate his intention to stay outside India for an uncertain period. So even if that person has stayed in India for a period exceeding 182 days during the previous year, or even throughout the previous year, if he moves outside India for these stated purposes, he will immediately become a non-resident. So the moment he goes outside India, he becomes non-resident under FEMA, and it sounds logical also, because a person, the moment he moves outside India, there is no requirement for the Reserve Bank to regulate, because he will be free to open those foreign exchange accounts, and he should be made free to deal with the foreign exchange the way he wants, and that's why this exception. However, when it comes to a person coming to India, it is very interesting that you have to understand that even if he has resided for more than 182 days during the preceding previous year, it will still not include following categories of persons. A person who has come or stays in India in either case otherwise than for taking up employment in India, or for carrying on in India a business or vocation in India, or for any other purpose in such circumstances as would indicate his intention to stay in India for an uncertain period. So unless these conditions are fulfilled, if that person is staying in India, he will not be treated as a person resident in India. So that aspect you will have to keep in mind, that either he has come for an employment in India, the moment he comes for employment in India, he doesn't become resident in the same year unless he has stayed for 182 days in the preceding year. Secondly, he should have come in India for starting his proprietary or partnership, or even if he is coming as an executive in a company for doing his business, or for any other purpose. That means he is coming on a transfer of a residence, he is indicating his intention that he would like to now settle down in India, he has moved his assets. So this is something which has to be actually proved with the intention. Merely because somebody has stayed for 2 years in India, he cannot claim. And this has created a menace. A lot of people have planned, and Reserve Bank actually was forced to issue an advisory when it came to buying of properties at Goa. A lot of people who stayed for 182 days in Goa, and on the basis of some advice, they purchased the property. And Reserve Bank has issued advisory which is available with almost all the district collectors also. With the immovable properties, one area which is managed by the state governments. So wherever these kind of people go for registration of the property, invariably they are shown those regulations, and sometimes the matter is referred to the Reserve Bank of India. Now whatever we discussed, now let us understand with the help of the example. Here is a case of Mr. X, who has left India on 1st January 2014 for taking up an employment outside India for the first time. And you have been asked to determine his residential status. And the another question is, can he acquire agricultural land in India before 30th June 2014? And I have given the answers also, that Mr. X will be considered to be a non-resident with effect from 1st January 2014 itself, irrespective of the fact that he was residing in India for more than 182 days in the preceding financial year, in view of the exception A that we have seen in the definition. And therefore, since he is a non-resident, he will not be entitled to buy agricultural land also in India. Second example is of Mr. Y, who is staying in Dubai for past several years, came to India on 1st May 2013 for medical treatment. He is planning to return to Dubai after medical treatment, and doctors have advised him to stay in India up to 31st October 2014. What will be his residential status under FEMA for the financial year 13-14 and 14-15? So as we have seen that notwithstanding its stay exceeding 182 days in India during the current year, Mr. Y was not present in India for 183 days or more during the preceding financial year. Hence he continues to be a non-resident during the financial year 13-14. His situation is also covered by exception B of the definition, and as we have seen that he has not come for those three stated purposes. He is not come to settle down in India for an indefinite period, and therefore even if he has stayed say throughout the year, even for 1.5-2 years, that person will not become a person resident in India. So that aspect has to be kept in mind. Sometimes when it is challenged, you'll have to actually prove that intention, that he never wanted to become a resident. And this kind of cases we have seen when people have opened and continued to hold FCNR or NRE accounts. And under Income Tax Act, those deposits in NR and FCNR and NRE accounts are tax free. So this is definitely going on the basis of the intentions of the person. His situation for financial year 14-15 will be covered by exception BC of the definition, since Mr. Y's stay in India will be for a specific purpose and not for uncertain period. And that is the reason why he will still be considered to be a non-resident. Yeah.
So in this example, if we don't consider this line, doctor has advised him to stay in India for 31st October.
Just a minute. ફરી ચાલુ કરવું પડશે. Yeah. Can I see your question?
Yes. So in that example of Mr. Y, if we don't consider the point doctor has advised him to stay in India up to 31st October 2014, then we can conclude that for the year 14-15 he is a resident in India.
No. The reason being that even if he has exceeded the period of 182 days, it is not his intention to stay in India indefinitely. So as we have seen that though he was present in India for 182 days during the previous year, apart from that he should be in India for those 3 specified reasons. If he is not in India for those 3 specified reasons, he will not be treated as a person resident in India. Now, this is another example of Mr. Z, who is a foreign citizen of non-Indian origin, who comes to India for the first time and sets up a proprietary concern in India on 1st August 2013 for carrying on business. What will be his residential status for the financial year 13-14, and can he acquire immovable property in India during the financial year 14-15? Now, Mr. Z will be a non-resident during the financial year 14-15, as he had not stayed in India for a period exceeding 182 days during the preceding financial year. And since Mr. Z is a non-resident for the financial year 14-15, he will not be entitled to acquire immovable property during 14-15 also, because since he was not in India for a period exceeding 182 days during the previous year. Maybe in the 3rd year, if he has continued, and 3rd year maybe he is entitled to buy a property. And Mr. Z, presuming that he is many times we used to give the example of Bill Clinton. At that time he was very famous. What Bill Clinton, if he wants to buy a house in India. So Bill Clinton can definitely buy a house in India if he becomes a person resident in India. And for becoming a person resident in India, he should have been in India in the previous year for 182 days. Once he is there, the next year also he will have to wait, because his residential status will be determined on the basis of his stay in the previous year. And in the 3rd year, he may be entitled to buy the property by that time. So it is very difficult. People may not be staying like this in India, and so it would be very difficult for anybody to plan and buy a property in India. Right? Now we are coming, having understood various terms. Now I think the subject would be very simpler. We have to just look at the regulations. The general permission for purchase of immovable property in India by non-resident Indians or PIO. So if anybody wants to buy property either for residential house or for commercial purposes, it's free. No restrictions, no reporting. Anybody can buy if he fits into this definition. No restrictions. So you can buy any number of residential houses or any number of commercial properties also. There are no restrictions. But we'll have to understand whether it is amounting to real estate business. That we'll see. Now, general permission covers only purchase of residential and commercial property, and it is not available for purchase of agricultural land, plantation property or farmhouse in India. So if somebody wants to buy a farmhouse, a big bungalow, then you better advise if your client happens to be NRI that you cannot buy that property, because if it is upon merely as by an error, Reserve Bank will take a liberal view. Otherwise, Reserve Bank is bit harsh on this kind of aspects also if it's proved that it was some intentional violation. As far as acquisition through gift, NRIs and PIO can freely acquire immovable property by way of gift, either from a person resident in India or an NRI or PIO. So even a resident can gift, but you'll have to understand that for resident giving a gift, there is a LRS scheme which stipulates a ceiling of $75,000 per year, and that includes ceiling for the gift also. So gift, if you are gifting a property, the value should not exceed $75,000. If it exceeds $75,000, then you need a specific approval from Reserve Bank of India. The property can be only commercial or residential in nature, as we understood, that you cannot give gift of a farmhouse or agricultural property. A foreign national of non-Indian origin resident outside India cannot acquire any immovable property in India by way of a gift. So a person who cannot buy something directly, he cannot acquire something indirectly also, and therefore this regulation. As far as acquisition through inheritance, so I always wonder that this is something which is automatic. Why? What was the need for this specific provision? But then if you notice, there are citizens of Bangladesh and Pakistan, when and on the minute reading of that notification, you will feel that when they have inherited that property, it's not that property gets transferred automatically in their name. Again, you may need to approach, that is our interpretation, that you may need to approach Reserve Bank of India, and many times there are issues because who is the person who has actually inherited also, that needs to be found out. So Reserve Bank would examine and may grant the permission or may ask that person to dispose of the property. So NRI, PIO or foreign nationals of non-Indian origin can inherit and hold immovable property in India from a person who was resident in India. However, citizens of Pakistan, Bangladesh, Sri Lanka, Afghanistan, China, Iran, Nepal, Bhutan should seek prior approval of the RBI for holding or transfer of inherited immovable property in India. So even for holding, they may need approval, and they want, again, when they want to sell, they will not be able to sell unless there is a permission given by the Reserve Bank of India. NRI, PIO or foreign national of non-Indian origin can inherit immovable property from a person resident in India or a person resident outside India. However, the person from whom the property is inherited should have acquired the same in accordance with the FEMA law in force applicable at the time of acquisition of the property. So if you inherited from a person who has committed some violations, then obviously you may be in difficulty. Yes?
Inheritance through succession or through will? Either.
Yeah. See, so long as he is able to prove that he is the legal heir, right? So one of the case could be that will is always challenged. If it is a case of a will or succession, what we have seen is that RBI would maybe insisting on a probate, right?
Probate or letter of administration. If the person dies without making a will in the state, then letter of administration is required. But if it is a property which has been acquired by the forefathers and it has been inherited through succession, because the person is born in a particular family, he has received that. Then in that case, whether even the Bangladeshi or the Pakistani, whose forefathers, that is 3 generations back, they were the Indians.
Correct.
They have inherited the property, let us say in Kutch, or maybe in on the border.
Correct.
What would be the situation? Whether the land could be inherited or transferred in the name of those people or not?
No, I have a question for you. Suppose if in a similar situation, a person is trying to sell the property, and suppose you are the buyer. What kind of documents you would insist? Would you straight away go on the basis of the documents that he furnishes to you and say that, look, I am the legal heir of this property, so please buy it? Will you buy that property? No, my question is, so when Reserve Bank steps into that shoes, when anything that requires Reserve Bank of India's approval, Reserve Bank, see what is misunderstood at times is that when Reserve Bank grants you the permission, the buyer, poor buyer will understand that this means all the approvals are given by Reserve Bank of India. Reserve Bank is not a competent authority to advise you on other succession issues. So Reserve Bank says if any approval under any other law is required, then you better take that approval. But generally the buyer, poor buyer will understand that since Reserve Bank has given the approval, it is a clear-cut case and many buyers can buy that. But normally we advise that you get proper probate. Otherwise, even the buyer, if he happens to be our client, we would not advise him to buy this kind of a property. So Reserve Bank also would like to have proper documents in hand, unless based on the document that you are the only heir. If you are able to prove that you are the only heir or successor.
2-3 heads also, and according to the letter of administration or probate, whatever is applicable, it has been obtained In that case, whether they will be able to, the reserving will be able to object to that, since he is a non-resident Indian, you cannot transfer it.
No, Reserve Bank generally, if proper documents are given, Reserve Bank will not question the authorities. But in one case, when you are saying, yesterday only I had an opportunity to examine a case where the grandfather was in India, in undivided India, and he died. And his two sons are now Pakistani citizens. And they have given some kind of a notary document, and they have said that you kindly help me in getting Reserve Bank of India's approval. But I said, where is the letter of probate or proper document? Because once we approach Reserve Bank of India, Reserve Bank will ask the questions that whether these two persons are actually the real owners or there is third person also involved. So that aspect you will have to satisfy. Of course, this is not my subject, and I am not an expert on that subject. But I would go by the common sense. Any buyer who he wants to buy that property, he would like to be extremely careful. Even in Bombay, we have seen a person dies, and there are two heirs. And even when it is given in the will, many times people insist that you please get a proper will, unless there is a nomination in the society record file. Because when nomination is filed, the nominee is entitled to dispose of that property, or nobody wants to fall in the dispute. So this could be a case where there are some disputes may arise.
No, my question was,
Yeah. Pardon me? No, nominee, I agree with you. Nominee is the trustee, but he is the person nominated to deal with the property. So he can deal with that property. If nominee has disposed of that property, the other person who claims to be also the heir, he has only right on the proceeds. He cannot stop the nominee from disposing of the property unless he brings a stay from the court of law. I mean, that is my understanding. But we are digressing from the subject, so let us stick to this subject. Yeah.
While reading of this slide and the previous slide, can it be concluded that a national of non-Indian or foreign national of non-Indian origin cannot get any gift of a farmhouse, but he can inherit a farmhouse in India?
True.
Is it?
Yes, that's true. But as farm, no, farmhouse is not defined. So, but there also we have seen plannings, because we have seen that there are married daughters outside India and they want to buy properties in India, and they go to their parents or brother, the parents who are actually very old, and money is given by them. The parents buy those farmhouses, and then they provide in the will that this will go to my daughter. You see, this is a perfect planning, but we many times advise that under FEMA, you should not plan, because there is no appeal on what Reserve Bank of India, action Reserve Bank of India will take. If Reserve Bank says that you have overdone it, probably Reserve Bank may not allow you and may ask you to dispose of this kind of properties. So one has to be extremely careful in planning under FEMA. Yeah. Let me tell you, I am not an expert, but since the hairs are lying, both the hairs are in Pakistan, probably they can go to Indian court also, because the subject matter is in India also. Property is in India, so they can go to a court in India also. No, father died in Pakistan. He died in Pakistan, but he had acquired the property when he was part of undivided India. So property was in India. He has to take a probate in India. So that is a process probably he will have to do. Yes. But that is not my cup of tea, so I better refrain. Yeah. Yes. Now coming to the transfer, NRIs can sell property in India to a person resident in India or a NRI or PIO. So while NRIs are free to transfer to resident, NRI or PIO, but when you come to PIO, there is a slight difference. Let us understand. They can transfer to a person resident in India, NRI or PIO with the prior approval of RBI. So I am not able to understand the logic, but when a PIO is selling a property, he cannot sell to another PIO unless there is a specific approval from the Reserve Bank of India. So that aspect one has to keep in mind. Foreign nationals of non-Indian origin, including citizens of Pakistan or Bangladesh or Sri Lanka, so these 8 countries can sell property in India with prior approval of RBI to a person resident in India, an NRI or PIO. When it's a RBI approval, you can sell to anybody. So there the PIO is included, because ultimately you are not able to sell without the Reserve Bank's approval. Now, transfer of property by NRI PIO, foreign national through gift. Now, NRI PIO can give property to person resident in India or NRI or PIO. A foreign national of non-Indian origin requires prior approval of RBI for gifting residential commercial property. So, if it's a pure non-Indian origin, then you'll have to approach RBI even for the gift. NRI PIO can gift an agricultural land or plantation property or farmhouse in India only to a person resident in India who is a citizen of India. So, this aspect has to be kept in mind, that by gift you cannot give agriculture or plantation land to another NRI, or even a person when he is a resident of India, he has to be a citizen of India. A foreign national of non-Indian origin would require the prior approval of RBI to gift agricultural land, plantation house or farmhouse, that we have seen. Now, coming to the mode of payments, NRI or PIO can pay for immovable property out of funds held in India through normal banking channels, or fund held in NRE, FCNRB or NRO accounts. So, sometimes you may have local funds also. You can buy property out of your local funds also, or you can use your deposits in India, or you can remit money from outside India. But no payment can be made either by traveler's check or by currency notes. So, suppose he has come and he's carried some currency, he cannot pay through those currency. He will have to then, in that event, deposit to his NRE or whatever account, and out of that he can issue the checks. But he cannot directly use those traveler's checks or currency for payment. Coming to the repatriation of property, this is one area people book and then cancel. And sometimes genuinely, and sometimes they have booked with a view to cancel and ultimately make a profit. So, this is one area which is, though the regulation permits, but one has to be very, very careful that if you are doing on a large scale, this may tantamount to trading in real estate. So, what this regulation says, NRIs PIO are allowed to credit refund of application money, earnest money deposits, purchase consideration on account of non-allotment, cancellation of bookings for purchase of residential commercial property, together with interest, if any, net of income tax payable thereon to NRE, FCNR account, if originally paid out of these accounts, or if it is paid out of NRO, then it can go to NRO account, subject to the satisfaction of the authorized dealers. So, this regulation is meant for those genuine investors. But there, we have seen cases where people are booking 10 properties at a time with 10 different builders, and then they are cancelling those properties and they are getting the money back. Maybe there is some back-to-back arrangement. The person is not interested in buying that property. That person is interested in making quick buck out of the boom in the real estate sector. Here one has to be extremely careful, because if it is up to an extent, it is all right. Otherwise, if it goes beyond a certain limit, then this may tantamount to trading in real estate. So, as I said, that you should not purely interpret the notification as it is. You may argue with this notification in front of Reserve Bank of India, and Reserve Bank can still take a different stand. So, that you have to be careful. Yeah.
So the current example what you mentioned, continuing from the same one, there's already a person who has n number of properties in India, all over India, just for the purpose of making capital gains. He's invested. He does not want to take the allotment or the possession, and does not even want to enter into the agreement, because that will attract stamp duty and everything. So right before, as the property is ready, or in between only, he plans to sell it off. Now, with 10 properties, I mean, where do I draw a line saying that, okay, you are already having 10 properties and this will tantamount to trading activity? I mean, where do we draw the line?
It's a very difficult question to answer, and it goes along with the Reserve Bank of India's economic policy. As we'll go along, we'll see that there are a lot of NRIs who are holding agricultural land in India. And when we had asked question, last time only when Bombay Chartered Accountant Society had organized this kind of a seminar, and I had an occasion to ask to CGM this question, that what NRI will do this with property. Suppose there are mango plantations or some, so you are not allowing us to do agriculture activity. He answered that, well, what NRI will do, he will have to definitely maintain those trees and do some cultivation activities. So what he said was not strictly in accordance with the FEMA regulations. Now, few years back, the same question I had posed before earlier CGM. He said, no, FEMA does not allow you to carry on any agricultural activity. So this FEMA law is such a law which Reserve Bank slips over. Let me tell you, there are a lot of enabling powers under FEMA. One should not be under because Reserve Bank is not doing anything does not mean that Reserve Bank does not have a power or it is allowed. And many people advise their clients and they are running away. And Reserve Bank is doing nothing. That does not mean that Reserve Bank cannot do. Right? This is an economic power. Reserve Bank will slip over till the time Reserve Bank feels that it benefits the economy or it does not damage the economy, and it is done for a genuine motive. If it is done in a large scale, then Reserve Bank feels that it's come to a point whereby it is damaging the economy. These are the enabling powers. Sometimes we feel that you cannot. We have been representing to Reserve Bank that you cannot offer normal courtesy, hospitality to your NRI relatives. Sometimes you cannot make small payments on their behalf. Reserve Bank keeps on always answering. Where you show us the case where we have taken the action. And we go and narrate few small incidents. But those are the cases where real violations have happened. So Reserve Bank does not exercise those enabling powers till the time Reserve Bank feels that this is damaging the economy. So when Reserve Bank will draw the line, we do not know. But it would be very difficult. It's a genuine case if you are able to explain for the reason. But if he keeps on buying every year, if it's a trend, he keeps on buying and selling, or say there is no difficulty, Reserve Bank is also slipping. But one day, we do not know what will happen. And I'll give you another classic example. Earlier, there were a lot of technical violations in the sense that people were not intimating within 30 days. When you come to this FDI, you will know that you have to file intimation to Reserve Bank of India when it is an inbound investment within 30 days of receipts of the funds. And within 6 months, you have to allot the shares. And on allotment of the shares, another 1 month, you have to file FCGPR forms. Earlier, people were slipping. They were not filing. And then Reserve Bank also said that they were furnishing wrong statistics to IMF and World Bank. So in between, they said that please, otherwise we'll start taking action. So when we were regularizing those transactions and filing for compounding, Reserve Bank was not levying any penalty or compounding charges. And things were moving smoothly, so we advised many of our clients that please go for compounding. And for several years, Reserve Bank did not do anything. And suddenly one fine day, Reserve Bank woke up and they started levying huge penalties. And ultimately, Chamber had to represent, stating that this has become a money-making business for Reserve Bank of India. And then Reserve Bank again liberalized those compounding provisions. So it will keep on varying. We do not know when Reserve Bank will wake up. If it is a need of an hour, then Reserve Bank will wake up. But there are plenty of enabling powers with Reserve Bank, which Reserve Bank slips over. Let's proceed further. Now, coming to repatriation of sale proceeds. It is a immobile property other than agricultural land, farmhouse, plantation property in India by NRI or PIO, which shall not exceed the amount paid for acquisition of the immobile property in foreign exchange received through normal banking channel. So what it says that you cannot repatriate profit, and we'll have to understand what do you mean by profit. And the amount paid out of funds held in foreign currency non-resident account or through foreign currency equivalent of the amount paid where such payment was made from the funds held in non-resident external account for acquisition of the property. And in case of residential property, the repatriation of sale proceeds restricted to not more than 2 such properties. Now, when 2 such properties, we again fail to understand that 2 means 2 in a financial year, or 2 in the in the lifetime of a person. There are no clarifications. People are remitting money is going and coming out. Reserve Bank is doing nothing, but the regulation is not very clear on that aspect. Repatriation shall include crediting the proceeds to an account denominated in foreign currency or to account of an Indian currency maintained with an AD. So all of us, we know that any credit to NRE account or FCNR account is as good as repatriation, because once that money is credited to those external accounts, then Reserve Bank will lose the control because it is freely repatriable outside India. Now, I have given an example of the repatriation. Here is a case where NRI has invested $2 million, and at that time the rate for long it was 45 rupees. So it was almost 9 crore rupees that he had invested in buying a property. Then when he sold it for 24 crores of rupees, and presuming that the rate is 60 rupees, he got almost 4 million, amount equivalent to 4 million US dollars. So there was in rupee terms, there was a gain of say 15 crore. And for the sake of convenience, I would calculate tax at 4.5 crores. So there is a net of tax gain of 10.5 crores. Yeah. Now, when we talk about $2 million, see at that time it was 45 rupees, now it is 60 rupees. So he can actually remit $2 million, that means 12 crores he is free to remit. Now balance 7.5 crores. So 7.5 crores out of that 1 million, that is 6 crore he can remit under a 1 million US dollar scheme. And balance 1.5 crore is not repatriable, means he is not repatriable during that year. Maybe he is able to repatriate in the next year, because this scheme is for per year. Now, as we have seen, whether two properties in a year or in a lifetime of an investor, that is not clear. But people are requesting the bank, and banks are repatriating, because NRI is also sometimes buying, then repatriating, again buying. So that is a benefit they have given to our own people, and Reserve Bank would like to slip over till it does not reach to a level where it is damaging the economy. Now, slip over, this is only my interpretation. No? So this is not something that Reserve Bank has said. But from our experience, we are saying that RBI will continue to slip over till they feel that it is benefiting the economy. Now, if you originally acquired out of your NRO funds, then the amount of capital gains, if any, arising out of the sale proceeds can be credited to the NRO account. And out of that NRO account, you can again take advantage of $1 million scheme and repatriate up to $1 million every year outside India. Now, coming to renting of residential or commercial property, NRI PIO can rent the property without the approval of RBI. The rent receipt can be credited to NRO account or NRE account or remitted abroad based on the appropriate certification by a chartered accountant, subject to that 15 CA, 15 CB formalities. Now, holding of immovable property bought when a resident after becoming NRI PIO, a person who had bought the residential or commercial property or agricultural land, plantation property, farmhouse in India, when he was resident, can continue to hold those property even after becoming NRI PIO. Now, coming to carrying on of those agricultural activities, as I have said, that per se is not permissible, but if you can make out a case that what I will do with those trees which are standing in the farm, now chiku plantation is there or something is there, then probably you can make a case. It is recommended that you bring that aspect to the notice of Reserve Bank and seek specific approval, because as I said, that policies keep on changing with the change in the personnel also at the Reserve Bank. Now, coming to the gentleman's question, whether a foreign company can buy a property in India. So there is a general permission to purchase immovable property in India by branch office or other place of business, because the foreign companies, either they will set up a branch office or some project office or a liaison office. Now, liaison office is not allowed to buy a property in India except the lease which is not exceeding 5 years, subject to applicable laws, rules, regulations or directions which may be issued from time to time, and a declaration has to be filed in form IPI within 90 days from the date of such acquisition with RBI. So this is the only incident of immovable property where you need to file a declaration with Reserve Bank of India. Otherwise, no declarations in case of immovable properties are required to be filed with Reserve Bank. Now, whatever we have discussed so far, that I have put in form of a table, and there is nothing new in this table. So I think that unless there are any specific questions, we'll skip this table. Now, coming to immovable properties abroad, an Indian citizen resident in India cannot acquire or transfer immovable property outside India without RBI approval, except by purchase out of RFC accounts, funds, or out of foreign funds acquired as a non-resident. So that person who was a non-resident and he has returned to India and he is holding some money outside India, because the persons who are returning are also allowed to retain money outside India, or if they want to bring it to India, they can still park that money in resident foreign currency account. So a person resident in India is free to buy property outside India from these two funds, or he can get as a gift or inheritance from returning Indians. He cannot acquire by way of gift from any other person. So resident in India cannot acquire as a gift from a third person. If third person is willing to give a gift, it is not possible. Foreign citizens who are Indian residents are free from any restrictions regarding immovable property transactions outside India. So there are a lot of persons who acquired foreign citizenship. Once they are foreign citizens, there are plenty of US nationals who are residing in India. Those US nationals who are residing in India are free to buy any property outside India. Of course, Reserve Bank does not release foreign exchange, but if by any chance if they are able to have some source of funds outside India, they can buy the property outside India. An Indian resident can transfer the above property as a gift to his relative who is also an Indian resident. So if Indian resident has got a property outside India and he wants to give to another relative, he has to be a resident in India, then he can gift away that property. And here relative has a very restricted meaning, that includes spouse, brother, sister, lineal ascendant or lineal descendant. So not that it includes a very vast list of relatives. Yeah.
So the term returning Indian is defined.
Returning Indian is not defined term. The returning Indian means you'll have to actually make a declaration at the custom that he is migrating. And when it comes on migration, there are some earlier there used to be certain benefits at the custom level also, including he can bring a car also. I don't know, duty free. Currently, I am not actually keeping track with those kind of regulations. But those are the cases where he is actually migrating. Not a case that he comes and stays, buys a house and stays for a few years in India.
So if a lady who is born in UK, married to household in India, she has a property from her father's side in UK, can't she inherit it?
She can.
Then sir, it doesn't come under your
No. This is a acquisition. I am talking about acquisition of the property. Inheritance we have seen earlier that if you want to, we'll go further, but if it is a case of an inheritance, there are no problem. If it is a property from the father's side, then you inherit it, and then father falls into lineal ascendant. So if that, no, that is fine. That is fine. Yeah, she can inherit that property. Pardon me?
that RFC account would include RFCD also.
No. Only RFC which you earned while you were non-resident, not RFCD. Now you are able to open RFCD account. So that does not mean that you can use that money to buy a property outside India. No. No. What by RFC means, as he said, RFC means it does not include RFCD, domestic. By RFC means the RFC when you are NRI and you had acquired certain funds which you have parked in resident foreign currency account, which you were otherwise entitled to keep it outside India. Yeah, but it was the exchange was acquired by you while you were non-resident. That exchange you are free to utilize to buy a property outside India, because you are not under a compulsion to bring that to India, but you prefer to do that. See, it was a kind of a when country was in need of funds, the Reserve Bank came out with the scheme that you bring it to RFC account, we will allow you to remit as and when you want. That's how they mopped up some money from outside India. As he said, since there is no specific provision under the notification, as we have seen in case of inheritance, they will require some approvals. We have seen certain citizens, if they are inheriting the property, they will require approval. Except that there are no restrictions on a person resident in India acquiring the property, right? The same logic applies. If in case of a doubt, you can approach Reserve Bank of India. The Reserve Bank will allow you, because this is a case of a genuine inheritance where you acquired that property through inheritance from your father. There are no, I don't see any difficulty in acquiring those kind of properties.
A branch and a project officer or one company can acquire a property. Correct. Now the thing is, it can acquire on the first day, it gets registered as a branch or a project.
Yeah. Once the moment they have approval in hand, project office does not require approval, because many cases they can set up without RBI approval. But then they will have to prove, because what regulation says, it has to be required for the purpose of business. So if that project is going to last very long only, then you can think of buying a property. And then you have to intimate, and then for selling also, Reserve Bank will come into the picture. So it's not that easy. When you file that thing, and if by the time you file those documents, your project is getting over, right? So this is not an area where some... Yes.
Are there any restrictions like how much property?
Foreign companies?
Foreign branch of these are
No, suppose you are having branches at 10 places in India. There are foreign banks. The live example is foreign banks. They are operating in India. Many of the banks have not set up subsidiaries in India. They are acquiring the property. But that is required for the purpose of their business. And without that, you cannot acquire the property. So one of the conditions is that it should be required for the purpose of the business.
So there is a general permission given.
Yeah.
But at the same time, I think you mentioned that from IPI is supposed to
It's only post facto. So having purchased, it's only intimation to Reserve Bank of India.
liaison office also. Or
Liaison office cannot buy the property.
representative office.
Representative will be also a liaison office. It should be a place of business in India. So liaison and representatives are not place of business in India. So if there is no business in India, they cannot buy the property.
Then also they have to intimate RBI. For sale also they have to intimate.
Yes.
They can intimate it then sell or sale and then intimate.
Repatriation will require the approval. So you want to remit the money outside India, it can happen only with the approval of RBI. But you can sell the property. But money will not go outside India without RBI approval.
For that business.
Yes.
Can an Indian resident inherit a foreign property from an Indian resident?
Apparently their inheritance, I don't know, by way of will.
Because gift is covered under this point, inheritance is not mentioned over here.
See, perhaps there is no bar, but whenever something is not very specifically provided, these are going to be the very rare cases. It is advisable that you refer the matter to RBI. Now, RBI in genuine cases is RBI is not like income tax office. We have seen RBI giving approvals in 2 days and 3 days times also. So you can walk in. Actually, nowadays they are not allowing. That is what you should take up with Reserve Bank. That
problem will be in that country where the property is located.
correct.
They may not allow.
Yes, that could be an issue, but you should walk in, and Yatin bhai, you should take up with RBI. They are not allowing professionals nowadays to go and represent.
Sir, one cannot take a stand under section 6(4) where there is a general permission that a resident can hold a property or inheritance which is received from a non-resident. In this case, he said when he was that we need to just check out when he is getting an inheritance from a resident, how he would have acquired that property. If that person would have acquired as per the FEMA provision, then very well he could have given inheritance. A resident can inherit a property from outside.
Yeah.
And
See,
for
this-
transfer, one can take a shelter under 6(4) that they have given a permission to transfer a property.
yes. Whenever inheritance happens, the first property that is acquired should always be in accordance with FEMA. If there is any violations of FEMA, then if no action was taken at that time, action will follow now. So that has to be clear. Now with these completes, as far as individuals are concerned, in property in India and property outside India, as well as in property in India by foreign companies for the purpose of business. Now what we are going to talk is a different subject. It is for business. So it's a kind of a real estate developmental activities that would be taking place in India. As we see, because this started somewhere in, I am not able to recollect, but somewhere in 1988 or 98, it started, because Reserve Bank has taken a very restricted view as far as investment in real estate development is concerned by NRIs, PIOs is very free, but when it comes to foreign nationals, Reserve Bank is always apprehensive that it could, because our real estate sector is not very much organized. Now we are seeing few big players in the real estate sector. Otherwise it was a very fragmented sector. And the government was always worried that if we allow foreigners to come and do developmental activities, then they will capture. And like what we have seen in the stock market, which is now captured by FIS, then the domestic financial institutions, that could happen. And for that very purpose, Reserve Bank has been very, very slow in opening these real estate developmental sectors for foreign investments. And as we see the conditions, there's such harsh conditions that it would be very difficult for anybody to, a small player, to comply with. So now those ceilings, 5 million and 10 million, they look very small. But then there is a question of that size of the land. Then we'll see that it is very difficult to get that kind of a land which is available for developmental activities. So when we see this regulation, it sounds very impractical. But whatever it may be, Reserve Bank is, or the government of India for that reason, is not very keen that foreign players come and capture our real estate segment. It is only because of a lot of pressure happening from World Bank and IMF that maybe this sector is open in a manner that very few people can take advantage. But at the same time, we'll see that if somebody wants to take advantage of the real estate sector, still they've opened a window of opportunity in the form of funding. So through NCDs, now that is opened up. So some players who want to invest in real estate sector and make money, NCD is one area where they can invest into real estate sector. So with this, we'll go a little further. Now, as we have seen, there are two routes for investment, automatic route and permission route. There are no difference between automatic route and permission route, except that in case of permission, you have to take approval from FIPB, and having obtained the approval, post approval, you have to follow the same steps as you are going to follow in the automatic route. The moment there is a investment, what I am talking about is investment into a corporate or any other incorporated entity in India, whereby a foreign person is investing into India. The moment he makes an investment, within 30 days he has to file an intimation with Reserve Bank of India. That is there is an annexure which is an advance reporting along with a KYC. So there are certain 6-7 particulars you will have to provide about that investor. And within 180 days you will have to file form FCGPR with Reserve Bank of India. And in case of unlisted entities, it is a DCF valuation. And earlier, even for new entities, Reserve Bank was insisting that you have to go by DCF valuation. But after a lot of representation, they have said that initial capital that is coming by way of subscription to articles and memorandum can come at par. Balance money has to come as under the DCF valuation. As far as listed companies is concerned, it is as per the SEBI guidelines. And having invested, they have to file an annual return every year of foreign assets and liabilities by 31st July every year. So these are procedural requirements. I think that will be dealt with in the subsequent session. The governing policy is consolidated FDI policy, which consolidates all the press notes issued earlier. And the last circular, though I have written 1st April 2013, but I have a copy now. It is 17th April 2014 is the last policy that you can download from DIPP website. Apart from that, RBI, so government is only a policy making authority, and government issues the policy in accordance with the industrial policy of the government of India. which is decided by the Ministry of Industry and Commerce, but the entire regulatory aspect is monitored by the Reserve Bank of India. And there is a notification number 20, Schedule 1 Annexure B, which is updated from time to time in accordance with the policy of Government of India. And then Reserve Bank issues various circulars and notifications. So circulars are called authorized persons. I think Manoj has dealt with those aspects in detail. And the master circulars which consolidate all the circulars issued during the year. Now, except what is stated here, it is free for everyone. So you see here that investors, who are the investors who will require FIPP approval? Here the citizens of Pakistan or entities incorporated in Pakistan can invest, except, so there are certain sectors which are totally prohibited. So except defense, space and atomic energy and other sectors, activities prohibited for foreign investments, only upon prior FIPP approval subject to sectoral caps. So earlier there were restrictions, but then we have opened up these sectors even for Pakistanis and Bangladeshis. Because Bangladesh recently, when Tatas wanted to make investment, that created an issue that unless you allow our people to invest in India, will not allow this Tatas to make investment in Bangladesh. And therefore we modified and we allowed those Bangladeshis also to make investment in India. So citizens of Bangladesh and entities incorporated in Bangladesh can invest in all the sectors where FDI is permitted upon prior FIPP approval. So few sectors were restricted, which we opened up for Bangladeshis. Now, which are the activities prohibited? The real estate business is prohibited. So when you say that people are coming here to develop and do business, then what do you mean by restricting the real estate business? But under FEMA, real estate business is a different meaning. So let us read that meaning. Real estate business means dealing in land and immobile property with a view to earning profit or earning income therefrom, and does not include development of townships, construction or residential commercial premises, roads or bridges, educational institutionals, recreational facilities, city and regional level infrastructure and townships. So basically, when you set up an entity, you cannot deal in with the ready-made properties. You buy huge property and sell huge property. That is not permissible. What you will have to essentially do is the developmental activities. And that's why it says it's a dealing in immobile property with a view to earning profit or earning income therefrom. And it will not include those kind of listed developmental activities. Those foreign companies will not be able to develop or construct farmhouses, and they will not also be entitled to deal in TDRs. Yeah. Which is a sector they are into? I don't see any difficulty. See, if you can prove that it was an excess property, it is not immediately required. Though the property was acquired with a view to carry on the business, genuine business activity of the business. But the answer would, in one case it may be yes, in one case it could be no also. That's why I say it will depend on your intentions, for what purpose you had acquired. I don't see, if it is a genuine case, I don't see any difficulty. So you mean to say you want to buy a mall or a floor in the mall with a view to let, right? That is not permissible. As I've said, you cannot buy ready-made property with a view to let it out, earning income out of therefrom. you should be involved into developmental activities. Now, in her case, it was a case that the company is involved maybe in a different sector, and that property was acquired for the purpose of the business, genuinely acquired for the purpose of business. I am going with that presumption. And temporarily you have found that to be in excess of your immediate requirements, and you let it out. So in that case, there is no difficulty, but here you are buying a property with a view to give it on lease. And even ICICI Bank, let me tell you, ICICI Bank has made a lot of mistakes where initially they advertised, actually when a project at Worli that they were jointly taken up with Oberoi Builders. At that time they came out with a scheme where many NRIs they were advised that you form a company, buy that property in a company and then you let it out, even to NRIs. And the Reserve Bank has taken a very serious view of that aspect, that you cannot buy a property in the name of a company and let it out. Now NRIs themselves are directly permitted to buy that property and lease it out. There is no difficulty. So if there is an NRI who wants to buy the entire floor on that mall and lease it out, it's purely permissible, but not to a company. Yeah. Pardon me?
Access property, access space.
No, we are talking, so of course that aspect will be dealt with in the subsequent session, but if it is a case where foreign investment is permissible, now let's take example of IT industry, software, where 100% foreign investment is permissible. An IT company has bought a huge property, right? And they find that the business is not going as it was expected, and property is likely to be vacant for 1 or 2 years. Now that sector, they have no intention, otherwise if they can prove that they have no intention that they will ever let that property to outsiders, but keeping that property idle makes no sense, and for that purpose they have let out that property.
It is permissible?
So that is not objectionable if it is something, because nobody is investing with a view to keep that property idle. But as I said, that it should be a genuine case. If somebody is planning acquiring huge property and then letting out, it's not permissible. You are doing small business, 80% of the property you let out and 20% only you are using. It should not be a case like that.
Okay, thank you.
Yeah.
Excuse me, sir.
Yeah.
Sir, what about leasing the property? I am into construction and development, and I lease out my infrastructure, whatever infrastructure I create. Is that is also being prohibited?
No, that I'll come to. That is permissible, because what you have to do is the construct and develop. Nowhere it is said that you are forced to sell.
Exactly.
So going by his example, suppose you yourself have developed that property.
Right.
And then having developed, you can lease it out. There is no restriction on, or there is no compulsion on you to sell off that property.
But how do we challenge when RBI comes up and says that your company needs to modify your memorandum and say that it will not lease even if it is into construction and development?
No, if you some of you are keeping a track of this consolidated FDI policy, if I am not wrong, in 2011,
yes, sir.
they had used this one jargon, which they said they will not make any income out of that property. Those words have been removed in subsequent FDI policy, and therefore, and the clarifications also that we have sought, they say that once you have developed the property, there is no difficulty in letting out that property. But per se, you should be a developer of that property.
Right. If
Right?
I'm
Then there is no difficulty.
Thank you, sir.
Yeah. Now, the entities in which you can make FDI, it is a general FDI guidelines that will apply. There are certain relaxations in the FDI policy for NRIs and PIO, that also we'll see. That per se there are huge ceilings which are applicable, but there are relaxations given to our own people. Now FDI and partnership or proprietorship is concerned only NRIs and PIO can invest. Now though it is stated that others will require RBI approval, but I am not aware either to that any other persons have got ever RBI approval for investment in partnership or proprietorship. The former proprietorship concerned with FDI cannot engage in agricultural plantation activities or real estate business or print media sector. The original investment on repatriation basis is possible only with the RBI approval. Even this kind of approvals we have not seen. And current income is freely repatriable after payment of taxes. So if capital is non-repatriable, the profit that you make is of course repatriable outside India. Now, as far as FDI and LLP is concerned, it is permissible with prior FIPB approval in sectors where 100% FDI is permissible and no performance related conditions are attached. So, real estate sector is one where a lot of conditions attached. Maybe there is no other sector where these kind of conditions are placed by this FIPB, and therefore this sector FDI per se is not permissible. However, on minute interpretation you will see that those performance related conditions are not applicable to NRIs and PIO, and therefore we have seen that with FIPB has granted some approval to NRIs and PIO to make investment in LLPs. But last week only I saw one notification on a stricter interpretation of that notification which permits FDI in LLP. It has not made any exceptions for NRIs and PIO, but one will have to represent to FIPB that those various performance related conditions are not applicable to NRIs and PIO, and therefore they should be looked at differently as compared to the pure foreign investors. Yeah.
As you said, directly a company cannot have into a real estate. For an example, there is an Indian company which is very well, which is developed in IT parks, industrial park, IT park. The project is under construction. They have developed a full commercial with all the regulatory permission and all. Suppose that project is up to 80% completed. Now there is a foreign investor which is interested in investing in that company, taking over it. So would that be termed as that foreign, it is an FDI in a real estate sector, or it is an FDI into an industrial park which will be developed and which will be given, or which will be sold, or which will be given on leased?
It is not an FDI. So that also aspect I have dealt with. It is not an FDI. It
In
should
real
be
estate.
a greenfield project. It should be at the early stage of development that you can enter. 80-90% work is done, and
Okay.
you join as a developer. That is not acceptable.
That would be not. But then it is not, basically the intention is not into deal into that commercial property. The intention is to develop that IT park and then either sell it or either give
You
it
should
up
be joining as a developer.
right from the
You
beginning.
cannot just make a show that you are a developer. So you are entering when 90% or 80% work is done. That's why it is also mentioned in the policy that you should enter at an early stage.
In an early
It
stage.
should be a greenfield project,
Okay.
and you should enter at the early stage of development. You cannot midway through enter when 50-60% or 70% work is done, and then you are saying that I am now developer, and with the intention that you only lease it out. That is not permissible. Now FDI in venture capital fund is also permissible. Investors is subject to FDI policy. If the domestic VCF is set up as a trust, this will require FIPB approval. A SEBI registered FVCI can make 100% investment in Indian venture capital undertaking and also set up a domestic AMC to manage the fund, or a domestic venture capital fund registered under the SEBI regulations. SEBI registered FVCI can invest under the FDI scheme as non-resident entity subject to FDI policy and FEMA regulations. So there are foreign funds, they can get it registered with SEBI, and then they can directly invest into FDI compliant projects. Trust other than VCF, any other trust is not permissible to make FDI. Now we are going to see the guidelines. What are the guidelines which are concerning us? So it is the township, housing and built up infrastructure and construction development projects. That is what is permitted under the FDI policy. It will include projects such as housing, commercial premises, hotel, resorts, hospitals, educational institutions, recreation facilities, and city and regional level infrastructure. So these are the projects you can undertake, and I have marked this hotel, resorts, and hospitals in a different color because there are separate guidelines which permit you 100% investment without those conditionalities. So though they are also appearing here, they are separate. Suppose you are actually into here we are talking about development of a construction of a hospital building, but suppose you are setting up in a hospital, then for the purpose of hospitals, those guidelines which are applicable to real estate sector will not be applicable to development of the hospital or say hotels or resorts. So that aspect has to be borne in mind. Now issue arises what do you mean by township? And earlier there were guidelines. If you look at the press note number 2 of that old press note, they prescribed the guidelines of some 2,500 acre land. Now those, nothing of that sort has been defined. So for the meaning of township, you will have to look at the local laws of concerned state. In Maharashtra, it is area as may be specified under Bombay Tenancy and Agricultural Land Act of 1948. In other state, area as may be notified by the concerned local authorities, because land being a state subject, state will determine what constitutes a township. So there could be different areas prescribed by different states. Now, construction and development projects. Can a company give a land to a builder under development agreement where consideration is received in terms of certain constructed area? So here is a case where you have invested in a project and you have acquired the land, but you yourself are not developing. Now you are entering into an agreement with a builder who will develop that property, and then builder will give you those constructed areas. So per se, you are not entitled to sell undeveloped land, but this is something which is permissible. This is one of the modes in which actually the activities are happening in India. A landlord, he may not be very conversant with various regulations, could still be an investor in the land, but so long as he is bearing the risk of all those development activities, this is something permissible. Now, what are the mandatory guidelines? That is the minimum area. If you look at those areas, the minimum 10 hectares of land, which is approximately 25 acres. So any company which wants to invite FDI, they should develop at least 10 hectares of land. And if you come to constructed area, it should be minimum of 50,000 square meters. Now in Bombay, I think it would be very rare that you will get land of this size. And in case of combination of projects, compliance with any one of these two conditions would be sufficient. So if you're partly developing land and partly, then if you meet 10 hectares land of criteria also should be sufficient, or you're developing at least 50,000 square meters of area, it is sufficient. Now the issue that arises, what comprises built up area? Whether it is FSI, carpet area or sellable, because earlier we used to see that builders were selling those areas super built up, and different areas there are different super built up areas. In Ville Parle you go, they add 100% also on the carpet area. So whether it is a sellable area or the area as per the agreement is something, but everything will depend on the local laws of that state. But basically it should be a sellable area. Does the minimum area need to be contiguous? So there is also, say in Bombay, if you are not able to get one you are buying, say, Church Gate, another at Ghatkopar, third at Vasai, whether that is permissible? Well, I think that may not be permissible. But if it constitutes a part of a big project, maybe you need to, and in case of any doubt, you are always free to approach FIPB for their clearance. Is there any, when you have this kind of a slightly doubtful area, whether there is a requirement to have a master plan approved? So when you bought a land of 10 hectares, but whether you need to have a master plan and get it approved, it's one issue which one will have to really test. But I think so long as you fulfill basic criteria of 10,000 hectares land or a 50,000 built up area, I think there is no need that so long as that land is capable of constructing that size of a project, because ultimately FEMA compliance is the responsibility of the company which is receiving FDI. So if there are any violations are happening, it is the company which will have to pay the price. So one has to be extremely careful to see that they comply with these guidelines. Now coming to minimum capitalization, for wholly owned subsidiary, there is investment of $10 million, and for JVs with a resident in India, it is 5 million. And there were certain tax angles also while fixing this kind of a ceiling, because they feared that it was rampant use of unofficial money prevalent in real estate sector, and government was really concerned that if they don't keep this kind of a criteria for land development, it is possible that money may come back through round tripping in some manner, that money may be channelized, and that was one of the reasons why they kept some stringent conditions so that everybody cannot use this route to just whitewash or change the color of their money. That is also one of the reasons. The funds of 5 million or 10 million, as the case may be, should be brought within a period of 6 months from the date of commencement of the business. So one of the issues that JV at what level? JV at the company level or at the project level? So, but when you are making an investment, you are examining the entity, foreign entity, and therefore you will have to examine whether that entity is fulfilling those conditions of development of 10 hectares. And so the JV has to be seen from the angle of or 10 million or 5 million. We'll have to see at the corporate level. So if there is nobody else, it is only foreign investor, he has to bring in $10 million. If there is a resident player, then foreign investor can bring in $5 million. What are the instruments of capitalization? So there are issues, because earlier people used to bring preference shares, redeemable preference shares, but now government says that what do you mean by capital is any kind of a convertible instrument. If it is not converted now, it has to be compulsorily converted later on. Otherwise, that would not amount to capitalization. However, there could be a long tenure, but it has to get converted into the equity. Now, whether is premium on shares to be counted? The answer would be yes, if it is a payment coming and the money is coming as a share premium account. So minimum capital includes share premium received along with the face value of the share only when it is received by the company upon issue of the shares to the non-resident investor. Now amount paid by the transferee during post-issue transfer of shares beyond the issue price of share cannot be taken into account while calculating premium minimum capitalization requirement. So if somebody is selling the share and you are paying say $10 million, then that money has not come to the company. If there is some profit happening, then that cannot be considered as a fulfillment of the requirement of $10 million. Now, what is meant by commencement of business? So when you have to bring in that money within 6 months of the commencement of the business, what do you mean by commencement of the business? Is also a matter of, there could be various reasons, but it is a matter of fact. So you may incorporate an entity, you have done nothing. Initially, you want to go into that sector and you just set up an entity. And you are in the process of identifying the land, and so it will all depend on the real life situation, and sometimes the entity may not take off for 2 years. Does that mean that you have to pump in $10 million in the beginning itself? I don't think so, but it will answer will depend on the actual situation. That Reserve Bank, as I said, talks or thinks in business like manner. So whenever you approach or goes to Reserve Bank or the FIPB, they will consider from various angles, and therefore there cannot be just one answer to every question. Yeah.
Like when the company which has received the FDI is under an obligation to do the project in its own company, or that project can be done by the two companies. Let's say a company ABC Limited has received a FDI, minimum capitalization is completed. Now a project which is should be a minimum threshold limit should be completed. Can this project could be completed by a XYZ and ABC both, or
It
ABC
can be
alone
done.
should be completed?
See, the company in which there is a FDI,
Yes.
the minimum area condition has to be fulfilled. So
Yes.
either they should buy the land,
Okay.
or they should develop 50,000 square meters of developed area.
Yes.
Now, having bought the land, it's not compulsory that they themselves develop, because
Okay.
there are experts available. You
Yes.
can go to L&T or Palanji for that reason.
Yes.
And if you find that L&T will do the job better, you can always see you are bearing all the risk of development,
Yeah.
and he is merely a contractor, right? But if you are giving away to a builder and he is saying that I will half project belongs to me, or you are getting certain constructed area, and there also I have said that it is possible to do that.
It is possible.
It is possible to do that, because what FDI guidelines restrict is undeveloped plots you will not be allowed to sell.
Yeah.
See, if anybody wants to get out at half the stage after 3 years, I am sorry, I am not able to develop, Reserve Bank will not grant the permission. or they may force you to sell the land at, they will not allow you to repatriate also. So profit could be in geo-parity. Reserve Bank is not giving the approvals. We have seen various cases. RBI is not granting the approvals. So you have to compulsorily develop that project, right? Either
Thank you.
yourself or through somebody else.
Somebody else. Thank you.
And in the genuine cases you want to get out, Reserve Bank will put a lot of conditions.
Yeah.
You have seen a case where they said they will not allow you to make profit.
Even FIPB has rejected few application.
So FIPB only, you have to go to FIPB
has
and they'll
rejected-
reject the application.
they
Mostly
rejected.
they'll reject the application.
There's an Indian company which satisfies the minimum capitalization condition. But the minimum area condition is satisfied because it holds two wholly owned subsidiaries which together hold the minimum land. Is that allowed?
See, so long as they're developing 50,000 square meters, so the company should be able to demonstrate that they are developing. If that they are not able to establish, then no, that is their business. Are you involved in development of that? Is a case where you set up a step down subsidiaries, right? But that itself, because then what you are doing? You are a holding company, you are not doing any developmental activities? I think it is better to refer to FIPB and seek specific approval. In case of doubt, you should always approach FIPB when there is no clear answer. It appears that you may be fulfilling the requirements, but better to approach FIPB. Now, at least 50% of the project should be developed within a period of 5 years from the date of obtaining statutory clearances. And how difficult this is when you are developing, say, 50,000 square meters in a country like India. When you say that at least 50% project must be developed, it's like a dream, you see, then because statutory approvals itself is taking such a long time. So this becomes very difficult that you develop this 50% project in 5 years. Investor is not allowed to sell undeveloped plots, as we have seen. So only restriction is on selling undeveloped plots. And undeveloped plots means where roads, water supply, street, lighting, drainage, sewerage and other conveniences as applicable under the prescribed regulations have not been made available. An investor is required to provide stipulated infrastructure and obtain completion certificate from the concerned local body, service agency, before he is allowed to dispose of these service housing plots. And there are issues here. The issues don't stop. It says what is the meaning of 50% project development. Now how do you measure? So again, this is an area we'll have to rely on the local authorities, and different local authorities have a different criteria of certification. Does that mean that suppose you are making a 20-story building, if you have completed 10 stories, whether it is 50% development? I do not know. It will all depend on the certification. So ultimately you will have to obtain what this guideline says, that you will have to do this in conjunction with the local authorities, who are the prime authorities dealing with the land. All statutory approvals. What do you mean by they should have obtained all the statutory approvals? Whether completion certificate, occupation certificate, or part occupation certificate. So these are, I'm only raising issues, don't expect answers. But these are the issues that we'll face. Can part of the project be sold prior to the completion certificate? That is also one more. These are the questions we have received from the people. Is it necessary to obtain completion certificate before a service housing plot can be sold? Is it necessary to complete the entire project before sale, lease or part of the project happen? Now selling means booking per se may not be selling. What I am referring is you are trying to get out of that project, right? When you are developing that project, booking, there is no restriction. But so maybe that you just announce and pre-launch booking is happening. I don't see any difficulty in that kind of sale activity.
So this 100 plots wherein roads, street lighting, this means within the boundaries of this, or what do you mean is street lighting?
No, where you are
Underdeveloped plot means street lighting, roads. So within that, your boundaries of your development, or it is you should have connectivity.
See, when you are, say, you are going for a development of 10-hectare land,
Right.
and you are only subplotting. It is very common if you go to some townside areas where they buy huge chunk of land and then they subplot it. And whatever various amenities are to be given, which normally our domestic builders don't provide. But when there is a company with FDI, they will face difficulty if that investor wants to repatriate the money or wants to get out of that company. Unless all those things are in place, while he may be able to sell off those plots, there is no difficulty.
But that property per se doesn't have that road connectivity or street lighting.
No,
then
when you are developing the subplotting a land,
no,
you
I'm
have to
saying
provide
that
all the amenities.
connectivity to that land itself does not have road and this.
No, then how will you develop? So you'll have to provide the connectivity also. I do not know about, but local laws will provide. When you are buying a 10 hectare of land and you are developing, there is a town planning scheme. When you put up the entire scheme, if there is no connectivity, how people will assess that road? And there could be a condition of street lights, roads.
Presently, this is happening with local builders. Local builders do this.
Local builders, if there is no foreign investment, they are doing anything.
Right.
That is a worst part. So these are all on paper only for the foreign investors, where they want to develop, pure foreigners. Again, this does not apply to NRIs and PIO.
But this
Right.
development of roads and street lighting per se is not the responsibility of a developer. It lies with the local authorities.
No, normally when a huge, I am not actually, those of you who might be dealing with the construction industry would know better. But builders are also nowadays, when they develop, they are providing some, they surrender some part of the road to the local authority and they have to develop that road. SS road has to be given. And they have to surrender. And correct.
No, but it has happened in many states wherein that local authorities are itself doing this township and all. They are not providing that connectivity for
Actually, you are seeing
a
this
number of
metro
years.
development. Now it was entire responsibility of that contractor to see that road is reconstructed. But how they have reconstructed the road? We'll say they have just tried to fill in small patches. Even it's very evident in Bombay Metro project. So those kind of contracts were there. The people are running away. It's a different story. But here are the FIPB and the Reserve Bank of India are concerned. And that's why these foreign investors are not coming. That's why I said the conditions are such that they don't want to come. And government also doesn't want that majority of them should come to India. That's the reason. Now all statutory approvals, you know it better, that it's very difficult, and how many approvals, that poor fellow may not be knowing that how many approvals are required. And so completion certificate, even before service housing plots can be sold. So that itself is also a difficulty in India. How do you get those kind of certification? Is it necessary to complete the entire project before sale, lease or part of the project? Only condition is 50% development, but entire project need not be completed. Once 50% project development work is done, then there is an exit route available to that foreign investor. Now, original repatriation. Original investment cannot be repatriated before a period of 3 years from the date of completion of minimum capitalization. Earlier exit permitted only with the FIPB approval. Now, what do you mean by original investment? When investment has come in tranches, now your money has not come in one shot, then that 3-year lock-in has to be seen from the date of receipt of each tranche, and not from the first investment has come, say, 3 years back, and the second tranche is coming now. Then you have to look at lock-in from each tranche that you are receiving. Up to what stage in a project can FDI investor participate? So that I think we have already dealt with, that it should be a greenfield project. Now, a question arose, what do you mean by repatriation? When a foreign investor has already invested and is selling off that project to another non-resident, whether that would amount to repatriation, the FIPB has said yes, that lock-in period of 3 years will apply, and 50% project completion within 5 years operating statutory clearance. So these two conditions would apply, and before that he will not be allowed to even sell it to another NRI, non-resident. So, pardon me? They have rejected. So here is a case that they will not allow you to get out only. So once you are in, you cannot get out. The project shall conform to the norms and standards, including land use requirements and provision of community amenities and common facilities as laid down in the local building control regulations, bylaws, rules and regulations. It will be the responsibility of the investor and investing company. So investor cannot say that I did not know, this company did not do all these things. So now the onus is put on both investor as well as investing company to obtain all the approvals, including those of the buildings, layout plans, developing internal and peripheral areas and other infrastructure facilities, pay development, external development and other charges, comply with all other requirements prescribed under rules, bylaws, regulations of the state government, municipal, local body concerned. The state government, municipal, local body concerned which approve the building development plans also required to monitor. Now this is very difficult. We have seen that Reserve Bank has delegated lot of powers to even authorized dealers, the filing of FCGPR and and it has created a chaos. Same applies to delegating these powers to local authorities. You have to actually really educate them. Many small authorities do not know also that what is this FEMA. So actually you will have to really make efforts, educate them that this is what is required, and without that you will not be able to. But they have said that these authorities also are required to monitor, and they don't know that what they have to monitor. That is an unfortunate part. You must have seen in the Ines's lecture that you are supposed to file a report to DGP, right? That is a filing requirement. Then we went to DGP, they said, why you are filing these documents with us? So they were not aware that what they have to do with that kind of a documentation. So sometimes there are no linkages between various authorities. Coming to other issues, can a company receive FDI when it has both FDI compliant and FDI non-compliant projects? This is clearly not possible, because that means you have 10 hectare of land and then small buildings you want to develop. That is not permissible. It is FDI compliant real estate project along with other FDI compliant business. So there are other business which are also FDI compliant, and you want to also diversify into real estate subject to minimum capitalization norms. While you can do that, but you have to be careful, because the moment you enter real estate sector, all other conditions will apply to you. So while you are happy doing other things, it could jeopardize your other activities, because all those conditionalities of lock-in and whatnot will apply to you also. Is it necessary to sell premises before exit? So this aspect we have dealt with, that it's not necessary that you should sell. So long as you have completed the developmental part, you are free. Purchase of agricultural land for real estate development, this is one area. And this depends, because ultimately it's an Indian entity. It's not a NRI or PIO acquiring the property. Once you set up an entity which is a resident of India, even if it is owned by a foreign, 100% foreign persons, so can that company acquire agricultural land? And in Maharashtra, it is possible if it is approved under section 63(1)(a), and this is told to me by experts in real estate, that it can be purchased if you are able to obtain the approval. Otherwise, it depends upon the state policy. I am told that in Chennai, that states permits even buying of agricultural land by corporates for development. Construct and lease, is it permissible? The answer is yes. Once you have developed, you have entered into greenfield project, yes, you can do that. Can a builder offer a minimum return to the non-resident investor? And can you have a put and call option? It's a very tricky area. And last year's FDI policy, if you've seen, a lot of controversies had arisen that put specific restrictions, and suddenly they've withdrawn. Even the month had not expired. So it appears that the company per se cannot give a full put and call option, but there could be a third party investor. So suppose a builder has invited foreign direct investment into a real estate project which is FDI compliant, and that investor does not know whether he is going to make money or he is going to lose. There could be a shareholders agreement whereby a resident promoter who is a part of that joint venture project can give a minimum guarantee that after 3 years, suppose we are not able to complete this project, I will buy away your shares. Only difficulty which we see is the DCF valuation policy, that whereby because you cannot pay beyond DCF valuation. So by any chance DCF valuation is lower than the guaranteed price, you will have a difficulty. In that event, they have an entity set up abroad, and there is an agreement with that overseas entity and the foreign non-resident investor, and that entity gives a guarantee to buy away those shares. And when there are NR to NR transfers, DCF valuation is not applicable. Yes, of course, fair pricing policy for the purpose of income tax it is applicable, but when price is paid is more than DCF valuation, there is no difficulty under income tax as well. Yeah, but this is indirectly a possible. Company cannot give any guarantee. Tax aspect, yes. NR to NR DCF you are talking about is. NR to NR transfer. FEMA, there is no valuation. Yeah, FEMA, there is nothing is prescribed. When NR to NR transfer is concerned, NR to NR RBI, there is no reporting. That is one area. R to NR, DCF valuation is there. Okay, rules are under consideration. Okay. Okay. Right. Now coming to investors or projects where relaxations are there, you have seen that hotel, tourism, hospitals, SEZs, industrial parks, education sectors, old age homes, there are separate policies, and therefore they will not be, if you are per se into that business, you will not be governed by those guidelines. As far as NRI and PIOs are concerned, they are also relaxed, and there are 4 conditions where it will not apply. So minimum area development condition will not apply to NRI PIO. So NRI can invest in a company with any size of a land. They do not have a minimum capitalization and 6 months capitalization period. So they don't have to bring in 5 million, 10 million. They can bring a small capital. There is a condition of 50% development of project within 5 years, even that is not applicable. And there is no lock-in on repatriation. So NRIs can freely invest, NRIs and PIOs. Now for the want of time, I will skip this FDI in industrial parks. And otherwise also, there is not much, it's for you to read those guidelines. Now as we said that then this real estate sector, if it is starved of fund, what is the way out? And the way out perhaps seems to be in NCDs. Now FIIs and QFI route is available to them. FIIs and QFIs are permitted to invest in listed or to be listed NCDs issued by an Indian company. The NCD investment by FIIs are treated as rupee borrowings and distinct from general external commercial borrowings. And they are not subject to ECB guidelines. And there is an aggregate debt limit of say 51 billion, and there are no individual ceilings also. There is no lock-in or residual period, no approval till aggregate debt limit reaches 90% of the total limit. Now for an exit, NCD may be sold on the floor of the stock exchange, but most commonly they are redeemed. And listed NCDs can be secured by a pledge, mortgage, or property hypothecation of receivable, etc., in favor of the debenture trustee. So this is perhaps an area where financing can happen to maybe some security is offered, and but the foreigner will not get to acquire that property. It is a pure financing, and This is a slide which gives some distinctive features of equity ownership vis-a-vis this. And what is important is that for ECB, certain restrictions will apply. Those restrictions will not apply to this kind of financing. Correct. Yes, yes. So you'll have to maybe some. Yes. Now we'll go to outbound investment in real estate project. The investment in foreign entities involved in real estate business is prohibited. So again, when we say real estate business means buying and selling of ready-made properties. So here you have to understand in a different context altogether. And it does not include development of townships. So here words we have used township, whatever it is, it will ultimately depend on the wordings under domestic law. So long as it is a bona fide construction development activities, it should be all right. Earlier there was a 400% of net worth that you could invest. Now you can go up to 100% of net worth, but RBI said that if you want more, you come to us, right? Under Regulation 4 of Notification 120, you can also invest from RFC account or out of funds held outside India by persons who are not permanently resident in India. And role of foreign exchange is permissible under Regulation 6. That the outbound investment will be, of course, dealt with separately. Now you can draw up to 100% of your net worth, and it includes remittances from India, ECB, capitalization of exports and guarantees. Earlier 50% of guarantee was counted, now it is 100% of guarantee also will be counted towards that thing. The other conditions are foreign entity to carry on bona fide business activity only. Investor is not on the RBI caution list or investigation by ED. Investor submits requests in form ODI to the authorized dealer and remits the fund only after obtaining UIN. Investor to route all remittances through a designated branch of an authorized dealer. Investor to file annual performance report every year. Investor to submit annual return of foreign liabilities and assets by 31st July every year. I think with this my presentation is complete, and thank you friends for the patient hearing.
To speak on a complex subject like FDI in immovable properties is like solving a complex jigsaw puzzle. And I think for non-stop for 2 hours he has done a great job. I think before I request Varsha to propose a vote of thanks, Mr. Parival Parikh would like to say.
Appears to be wiser, and now we have kept 5-6 days again for you to refresh. Next week we will be randomly asking some questions on what we study. And be a responsible citizen, and please go and vote. Enjoy your weekend. And now I request Varsha to propose vote of no.
Friends, the notification on investment in immovable property, though it's very small, but it's very difficult to apply actually. See, as I just made the analysis, it has got 2 categories of the investors. The NRI, PIO, 3 situations: acquire, hold and transfer, 3 modes: inheritance or gift or regular, 2 categories: agricultural, non-agricultural, and then you have exempt categories, and then you have prohibited people to buy. So then it becomes a very complex matrix to apply when you are dealing with particular situation. But you'll all agree that he has dealt with this complicated subject in a very lucid manner. The material provided by him and the approach followed by him is going to be a great reference material for us in future to refer to. And to complete the scope of this subject, he has also dealt with FDI and ODI in so much thoroughly. So with this, we are in fact very much grateful to you for this educative session, we must say. And I request you all you carry out this vote of thanks with a big round of applause. So we all met on the next Friday, and keep learning going on. Thanks.